Ladies and gentlemen, good day and welcome to the Ajmera Realty and Infra India Limited Q2 and H1FY25 earnings conference call. Please note, all participants' line will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Dhanvil Ajmera, Director, and Mr. Nitin Bhavisa, CFO from Ajmera Realty and Infra India Limited. Thank you, and over to you, sir.
Thank you. Good evening, everyone, and a warm welcome to you all. On behalf of the company, I would like to thank you all for participating in Ajmera Realty and Infra India Limited's earnings call for the second quarter FY25. The call will commence with opening remarks by our director, Mr. Dhanvil Ajmera, and will be followed by the business performance briefing by myself. We have already shared the operational updates for the quarter in the second week of October 2024. The investor presentation and the press release based on the financial results adopted by the board have been uploaded on the stock exchange website and can be downloaded from our company website. Please do note that some of the statements in today's discussion may be forward-looking in nature, reflecting the company's outlook and may involve certain risks and uncertainties that the company may face. I would now like to hand over the call to our director, Mr. Dhanvil Ajmera. Thank you, and over to you, sir.
Hello, good evening everyone, and thank you for joining us today. I will begin my discussions with sharing the macroeconomics of the sector updates and thereby taking a little bit of highlights on our company as well. As we all know that the real estate market is looking very buoyant, and especially the residential sector, which we all operate in a larger way, continues to grow with a stronger buyer sentiment, increased demand of living spaces, like larger living spaces, and supportive policies by government. Major cities like Mumbai have recorded higher sales volume and significant year-on-year growth, reflecting a healthy market dynamics. A reduction in unsold inventory suggests a balanced supply-demand scenario, with the stable interest rates have made the home loans even more accessible. These are some positive developments in the real estate sector, and that is why established players like us has favorably been able to capitalize the momentum of the market and thereby making a better growth in the company. Furthermore, technological advancements are reshaping the industry, with a lot of developers, including us, are adopting to digital tools for sales and customer engagement, and even for construction and customer relation management, etc. With these encouraging trends, we are positioned to leverage the opportunities ahead and continue delivering value to our stakeholders. On the back of these great macroeconomic conditions, I'm delighted to inform you that we've achieved a 560 crores of sales during the half year of FY25, driven by a few of our projects, which are known as Ajmera Manhattan, Ajmera Freeway, along with the recently launched project in last quarter, Ajmera Vihara. We remain committed to achieving our stated guidance for the year. FY25 is expected to be a significant leap of growth in our journey, with all our projects performing well and generating robust collections. Our flagship project, Ajmera Manhattan, which with compact luxury apartments, has seen 85% of its inventory sold out. As a result, the next phase is expected to be launched soon. The project is significant progress, with Tower B completed up to 9th level and Tower A up to 8th level. We have also launched the next phase of Ajmera Greenfinity and have sold 59% of its inventory. Regarding construction status, Tower A and B have completed up to 2nd level. On our other projects, Ajmera Eden in Ghatkopar has seen about 69% of its inventory being sold, with the 14th floor slab completed, which is almost the last slab of the building. For Ajmera Freeway, which is our project in Juhu, the structure and the framework and with plaster has been completed, and 69% of its inventory is also being sold, contributing significantly to our sales value, and we are hoping to give possession of this project very soon. We are committed to handing over all these projects in a couple of quarters and advancing towards their fast-track completion. Furthermore, our newly launched project, Ajmera Vihara at Bhandup, which saw a great successful launch in the last quarter, and till now, I'm very happy to say that we have sold 49% of the inventory which was opened up. It is currently under the excavation stage with piling work ongoing. These developments have collectively supported our sales performance. Moving to Bangalore project, our affordable residential projects like Lugano and Florenza have sold about 90% of their inventory and are under fast-track execution. We remain committed to delivering all our projects well ahead of the committed RERA timeline. Looking ahead, we are more than confident that in achieving our strategic vision of 5x, we have exciting year ahead with the potential launches of about 17 lakh square feet with a gross development of 4,200 plus crores. To conclude, it's worth to bring to your notice, and we are very happy to say that we have successfully done a preferential allotment of equity shares amounting to 225 crores to some marquee strategic investors, and plan to utilize these proceeds which have been committed for debt reduction and for our growth purposes in the business. On this note, I would like to thank you all for being part of this journey, wishing you all a very, very happy festivities which are coming ahead, and we hope this new year and Diwali brings a lot of success to not only us but to all of us who have been part of this journey, and we wish you all a very happy Diwali and a happy new year. I would request our CFO, Mr. Nitin Bhavisi, to take you through the performance highlights of our company. Thank you.
Thank you, sir. Before we move on to Q&A session, allow me to summarize the compelling operational and financial performance what we have delivered for Q2 and first half of FY25. Starting with operational performance for the quarter, our sales value stood at 254 crore and sales area stood at 1,14,000 plus square feet. Our collection grew by 20% to reach to 133 crores. On the financial highlights, our total revenue grew by solid 38% to 204 crore. Our EBITDA stood at 65 crore, up by 62% YOY, and PAT stood at 36 crore, which is also 58% growth YOY. Coming to our performance for the half year ended, our sales value reached to 560 crore, marking an 18% YOY growth, with a sales area touching to 2,44,000 plus square feet. The collection stood at 298 crore, which is 34% growth YOY. Revenue for this period hit to 400 crores, representing 51% increase YOY. Our EBITDA stood at 131 crore, which is 67% growth YOY, and EBITDA margin at 33%. PAT stood at 69 crore, which is increase of 55% YOY, resulting PAT margin of 17%. I'm also pleased to inform you that despite aggressive business development activities, our debt remains stable at 793 crores, and we have improved the debt equity ratio further below 1x benchmark to 0.85:1. The weighted average cost of debt has marginally increased to 12.22% on the back of project level private equity deal, which is successfully closed for part funding the acquisition and approval related costs at one of the projects. Further, with proposed equity raise, company remains very well capitalized to fund its growth plans. With our OC received and ongoing portfolio, we have a revenue visibility of 1,780 crores, and from our projects in launch pipeline, which is estimated to contribute about 4,270 crores. Hence, our total revenue visibility stands stronger than ever to rupees 6,050 crore. The estimated net cash flow from our OC received and ongoing project is poised to about 760 crore. With this concise summary of our business highlights and financial performance, I invite your question and look forward to interacting further with you all. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Jeevan from Sahasra Capital. Please go ahead.
Happy Diwali, Dhaval bhai. Few questions. One is obviously if you can give some details on this private equity deal actually of 88 crores. So what is the total project cost and how much? So how big is that project? If you can, and what percentage we are basically diluted and all. So if you can just give some detail on the private equity deal.
Thank you, Jeevan bhai. This project, what we have done a deal with Motilal Oswal. It is a project which we have acquired from Tata Communications, the land which is acquired from Tata Communications in Vikhroli. The total sellable area over there is roughly about 3 lakh square feet with a top line expectation of 650-ish crores from the project. And the project cost is roughly in about 250 to 300 crores. So plus the land and other things. So we are expecting a great a margin in this project, and the market is looking buoyant with the mid segment. What we are targeting over there is a mid segment market. So that's where we are working on.
Perfect.
And Mr. Jeevan, just to clarify on your question regarding the dilution, it is a structured debt deal with a committed IRR. So there is no, equity level dilution, if I have read the question right. And, it is completely with a cap of the IRR as such.
Perfect. And secondly, on the part of the, so we were about to sell the land in the South Mumbai to, reduce our debt. So that's been, we are talking since last 2-3 quarters. So any update on that? Are we closer to that? Any good news there?
Well, we are, to be honest with you, we are still under discussions. There are a few offers which have come in. Some are not to our satisfaction. Some are still evaluating because, these are high ticket HNI individual items where they are doing evaluating, which would take a little time, but we are on the job. We've got 2-3 offers. Few have not been up to the mark, so we've not pursued it further. 1-2 are looking positive, but they are taking time to evaluate in terms of the legalities and also, which we are respecting and moving ahead accordingly.
Great, sir. And third part is on the repatriation. So we were supposed to repatriate our profits from outside. So any update on that? How long will it take for us?
So repatriation, there are 2 parts. Some part of it is coming from London. Second part of it is coming from Bahrain. While the London part, some part have already started getting money in our books, and we have already got about 40-50 crores plus of money to be coming in more, and we are expecting that to come in the next few quarters. As far as Bahrain is concerned, we have our deal with the company over there is that we would get area against the money which is to be given, and we are expecting to have a deal for that in terms of selling that area, which is expected once the building is ready, and our assumption is by next year the building should be ready. So our sense is late part of 25, early part of 26 is where Bahrain money should be expected.
Perfect. And the last question, Dolwai, is on the Kanjurmarg side. So any timeline you can share when are we expecting to launch our first project in Kanjurmarg?
Kanjurmarg, we've already given our guidance. We have already started giving our applications for approval. Plannings have almost frozen. We are hopeful to have this by March, April this year. Next 25.
Perfect. Thanks a lot. Wonderful, sir. Thank you.
Thank you. The next question is from the line of Dikshit Doshi who is an individual investor. Please go ahead.
Yeah, good evening, sir. Thanks for the opportunity. So in this Kanjurmarg land, all the litigations which were there because there was some PIL earlier in High Court. So all those litigations are now cleared and settled, and this land is now clear to for the projects to be launched, or that litigation is still under process and we expect it to get cleared.
So this property of ours did not have any litigation, number one. Well, there was a PIL file, but our land was wrongly demarcated or earmarked in that suit or the PIL, which we have already clarified, and the court has given us the order to that effect accordingly. So our property is not part of any litigation, and hence we have already started proceeding in terms of all the approvals related to Kanjurmarg and its buildings and etc. And that is why we are hopeful to launch by March 25.
Okay, very good. And my second question is related to Wadala land. So our company has development rights for Wadala land, and from what I understand is this land was purchased long back when this company was not formed. So we have the development rights, and the ownership of the land lies with Vijayanagar Apartments. So when we in our Manhattan project, we do a tripartite agreement between Ajmera, the buyer, and the Vijayanagar Apartment. So we have to give some consideration to Vijayanagar against this land, or how does it work? If you can help us explain.
So, back in those days, there were always development agreement which was there, because there was in 20 years back or 30 years back, the stamp duty implications were different for a development agreement versus outright buy of land, conveyance of land. And hence every agreement was on development agreement. But having said that, Vijayanagar has already given, there is no consideration to be given to Vijayanagar Apartment for the sale of flats in Manhattan. It's already entire receipts, and the money of the sales receipts are going to come in the company itself.
Okay, and that will be true for the future projects to be launched in Wadala, or for all the projects to be launched?
Yeah. All sales of apartments in Manhattan or Wadala will be, all the receipts of this comes in the company.
Okay, thanks a lot. Thank you, sir.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of T.T. Patel, who is an individual investor. Please go ahead.
Congrats on the spectacular set of usual numbers, team at Ajmera. I just wanted to know about the joint venture which you are undertaking with Rustomjee. It was launched with a lot of fanfare, but we are unable to detect if there is any plan to launch it anytime soon.
If you go to our presentation, we have already given that as a guidance of launching this project again sometime in March 25, for which the site has already been vacated over there. We have already started applying for permissions related to the approvals, etc. And we are hoping to get that in the next 2-3 months' time, and by March we should be able to launch this project.
Okay. Would you be planning to sell any residential units in this, or it will be purely commercial?
No, our plan is to do commercial over there, and we would be doing purely commercial. Of course, there will be residential for the tenants who have been part of the society, but for our sale portion, it's going to be either retail or commercial offices.
All right. Clear. Thank you very much. Is there any, by the way, when will the Maharera registration occur? Is there a timeline set for this? Is it March or will it be earlier?
Launch of March, we are expecting that to happen by February and March only, so that the moment we get the number we are about to sell, we start selling.
Yes. Thank you very much.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all the participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Pavandeep Bhatia from NV Alpha. Please go ahead.
Hello, sir. Thank you for the opportunity. Sir, when you say potential launches GDV is 4,270 crores. Hello, am I audible?
Yeah, we can hear you.
Yeah, audible.
Yeah. So in your slide, when you say 4,270 crores of launch GDV, so is it safe to assume that this is the launch pipeline over the next 1 year and it will be executed over the next 2 to 3 years?
Certainly, we have given the launch timelines and as well the estimated completion timelines. In our estimate, given the give and take, it is 3.5 or 2 3 years which we are targeting for the entire portfolio. And yes, for in that particular time we estimate to consummate the entire project cash flows.
Okay. And the estimated cost required to complete these launch GDVs that we are talking about?
So as you know that this is the very mix of our own land bank plus the asset light models like the redevelopment, society redevelopment, SRA redevelopment and such kind of a thing. So cost model varies project to project kind of a thing. But overall on the we remain in the very same trajectory of about 30% plus on the EBITDA and the PAT margin somewhere sub 20%.
Okay. Sir, one more question, sir. What is our expectations on the margins when it is own land and or when we are doing redevelopment or JV? Do we have a understanding of the breakup of the margins that we can achieve?
So yeah, every project what we do are on a different margins and percentages. What we usually do is for our own land banks where we have already paid off for the land and only the premium and the construction cost and all that is to be done. We are expecting IRRs over there in the range of 35 to 45%. Depending upon the cost of construction, etc. And these are our EBITDA margins, sorry. And when we look at redevelopment projects, we look at anywhere between 25 to 30%. If it's a joint venture, also it's the range of 30-ish%. And outright is in the range of 25 to 30. Some slum redevelopment or society redevelopment projects, if the location is very good, we are okay to look at a little lower margin between 20 to 25%. But if I have to give a sense, it's between 20 to 30% is the projects which we look outside our portfolios or books what we have, and within our own projects or our own land banks, we are looking at 35 to 45% gross EBITDA margins.
Got it, sir. Sir, on the Wadala and Kanjurmarg land, what is the freehold land that is available with us when you talk about acres? Because you have said on the slide it is 11.1 million potential development potential. So if we can get a understanding on the breakup, that what is there in the Wadala land and how much is there in the Kanjurmarg land?
So Kanjurmarg is a 66-acre land parcel. And Wadala is a layout of 100 acres which we have already developed a bit. We've already, there is under construction and some which has already been developed, 1/3 of which is also garden. So the balanced land area which we have is basically because it's a larger layout, so we look at the layout FSI, not the land FSI. So basically, we may be having If I have to look at in terms of acreage, it will be about 15 or 20 acres, but give or take here and there. But FSI point of view, we have about 3 lakh square feet of, 30 lakh square feet of sellable area to be sold and revenue to be generated from there.
30 lakhs in Wadala, correct?
Yeah, and 80 lakhs in Kanjurmarg.
Got it, sir. Okay. Thank you, sir. I'll join back in the queue if I have any questions.
Thank you. The next question is from the line of Vinay Nagori from Fintegrity Wealth Management. Please go ahead.
Hi, Dhaval bhai. How are you?
All well, how are you?
Good, good. Dhaval bhai, just there's one correction that has to be done in the investor presentation is in the Wadala residential segment. No, it's okay. Residential place. Okay. So, right. There is around 3.1 million square feet available land for development in Wadala. Am I right? So, the current price is around 35 to 37,000 square feet. So, this becomes a potential 11,000 crore top line for us.
Yes.
And similarly, Kanjurmarg, how much would be the potential for the 8 million square feet over the period of 5, 7, 8 years, whatever it is?
See, ideally over there, the prices today are around 27, 28,000 for residential and about 30-ish for commercial.
Okay. So even if we consider 25,000 and 20...
8-year scenario, I think 30,000 is what we should consider on a conservative side.
Okay. And just wanted to know the roadmap for the SPV, where currently we got the NCLT approval for the 6.5 acre land in Wadala.
So happy to bring the development that, all the NCLT related formalities completed, shares on the demerger has been allotted and credited to the, shareholders. So all the formalities on demerger has been completed.
So what are our plans with that land now? Like when are we going to develop that, and are we going to rent it out or are we going to sell it off? So any plans over there?
So we are under the master planning stage now that we have all the complete clarity in terms of the legalities and all of that. Secondly, we are definitely looking at commercial development over there. While we are doing the master planning, but we are open for as a company, we are very open for a partnership level to come in, which will add value to the entire piece of land. And hence we are working on the same if somebody wants to come. But however, the master plan and all of the approval processes, we will start in the next few months' time.
Okay, super. Thanks a lot, Dhaval bhai. Wish you all the luck.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Amit from Edgy Hava. Please go ahead.
Yeah, good evening, sir. Am I audible?
Yes, sir.
Yeah, actually most of my questions have been answered anyways, and congratulations for a good set of numbers and happy Diwali to all the company people. Thank you.
Thank you. Wishing you a very happy Diwali and a new year.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all the participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. The next follow-up question is from the line of Vinay Nagori from Integrated Wealth Management. Please go ahead.
Dhaval bhai, apart from Wadala has two sections. One is the SPV currently and normal Wadala, and then Kanjurmarg. So we've got Vikhroli and any other land banks we own apart from this?
We have Kanjurmarg, we have Wadala, we have Vikhroli, we have Ghatkopar, we have Juhu, Versova, Borivali, Bandra. These are the projects where it's going to either under planning stage or launch stage in the next few months' time.
Okay. So just a suggestion now, owned land bank, can you also mention the other land banks also?
In terms, sorry, I didn't get you.
So development potential, we have a section owned land bank in the investor presentation. So apart from the current land, if you can mention the other owned land banks also if possible.
So, slide number 20, which encompasses the entire details of the launch pipeline, and where we have the two projects which are on our own land bank, and rest of the projects are the asset-light partnership or the redevelopment projects. Plus, we have about 8 lakh square feet plus on the Banduk balance phase. We have only launched the first phase. So that 8,30,000 is going to be the development potential out of the Banduk one also.
Okay. And now, with the vision of growing at around 50%, so will we require some cash flows to like invest or any fundraise in future? And multiple optionalities coming in, like the commercial for Wadala, Kanjurmarg launch. So is there probably a possibility that to grow fast, if we get an opportunity, get something, there's a possibility of a fundraise in future as well?
So we have, won the first round of the prep issue, which is the equity raise of 225 crore, and wherein the end use is that of the multiple debt repayment, project launches, and to fund the promoter contribution and the initial contribution on those launches. So to bring the momentum on the launches and as well the general corporate purpose. Going forward, yes, we will be having some partnerships at a project level where there is a requirement of the capital, is like we have sensitized on the Wadala commercial development, where we are open to such partnerships, because being a commercial development, it requires a capital requirement. Plus, we are looking at a credible partnership whereby not only the capital but as well the credentials of the partner will be of the level whereby the leasing support and such kind of a value addition to the overall project development.
Super. Thanks a lot, Dhawal bhai.
Thank you.
Thank you. The next follow-up question is from the line of Pavandeep Bhatia from NV Alpha. Please go ahead.
Hello.
Yes, sir, you're audible.
Yeah. Sir, we were speaking about the co-ownership that we have in your joint development.
Sorry to interrupt you, sir. I would request you to please use your handset.
Okay. Am I audible now?
Yes, sir.
Sir, when we talk about 4,270 crores of GDV over the next 2-3 years, we are talking about at least 800 to 1,000 crores of construction cost at least, and the land that we are speaking about, we have not even included Kanjurmarg in that. So, and then the growth potential for both sides of very big, and for the company as well. So how is our thought process, or where cash flows that we'll get from in terms of developing these lands? Because as you said on this call only, March is somewhere you were going to launch Kanjurmarg, and then you will have a thought process of developing it. It's a huge land parcel. So what is our understanding on building those cash flows and funding it for the construction?
So let me clarify that out of this entire 4,270 crore of the launch pipeline, two projects which is almost about 50% of this total, which is Wadala 1,550 crore and the Kanjurmarg first phase, which is 800 crores. So about 2,300 crores on our own land, and rest of the other projects which are of asset-light strategy, where there is the cost is spread over on the life cycle of the project. It is not so upfront. So we believe that it is not going to put a pressure on upfront requirement. However, we are looking at a project level debt requirement and debt funding, which is the working capital loans, and we will continue to do this particular with the support of our operating cash flow, because good number of projects are getting over soon, as highlighted into the opening commentary. So that particular support plus this equity raise is definitely going to keep us well liquidate and well capitalized on to take this show forward.
See, basically, both these projects, like Wadala and Kanjurmarg, okay, they are larger projects, and definitely it will have different segments of projects coming in. It's just not going to be a residential or only commercial or retail. There will be a mix of everything which will come over there. The demand for the micro market may have limited for a residential project, may have a limited for commercial, may have limited for retail. But if I do all three things simultaneously, my sales value or my sales potential becomes 3x rather than 1x. So that is the whole game plan what we are working on. Obviously, these all will require funding. This all will require partnership. And as Nitin Bhai rightly said, that we are open to bring in partners who add value to the project and who bring in better potential than probably we individually can do. So definitely someone who is a master in, let's say, just giving as an example, a retail or commercial or hospitality or something like that, we are very happy to partner because A, it will add value to the entire complex. B, it will also add value to the project because it will come with a brand or it will come with a legacy. And C, it will also give a better valuation than probably just doing it alone. So it's a win-win situation what we are looking at.
Okay. So, but with your estimates, this 4,270 crores plus the revenue potential of ongoing projects, which is 1,700 crores, what will be the cash flow requirement for you and planning that you must have done in over the next 3, 4, 5 years that is going to emerge? As you said, there will be projects which will be completed also. So, what is that commitment that is there in your mind over the next 3, 4 years?
So to give you a very perspective about this, the requirement of cash, the cash generation out of this particular projects to launch, which is having the GDV of 4,200 plus crores, is about 1,200 crores. So that gives the the kind of cash requirement and the cash generation out of this one. Plus, on the slide 29, we have given the entire breakup of how the cash flow is going to be accruing to us in the next about 3 to 3.5 years. Ongoing projects is going to contribute about 760 crore of the cash from the completion, and where we are looking at a life cycle of about maximum 2.5 to 3 years. Plus, we have cash generation from other avenues and asset monetization, which is 330 crore, and all these three pieces together is going to generate a cash of about 2,300 crores estimation.
Mr. Pavandeep, does that answer your question?
Got it. Thank you. Thank you for your time.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Nitin Bavisi for closing comments.
Thank you everybody for participating in this earnings call for Q2 and first half of FY25. Look forward to interacting with you all. If you have any further interactions or any further queries, and till such time, I wish you all the best and the very happy Diwali and happy New Year to everybody, to you and your family. Thank you everybody.
Thank you.
On behalf of Ajmera Realty and Infra India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect.